What's up, guys? It's March 26th, 2025. Had a pretty cool sell-off today from the higher time frame perspective. Makes sense, so we can start to piece together things. Give a quick shout out to everyone that watches these videos. I appreciate you guys. And what's up to all the new members? Thanks for joining. Dropping more videos in April. So here is the daily chart. We've been talking about this for a while now. Leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4. Any pullback, any leg past leg 2, so like 3, 4, 5, 6, whatever, is the probabilities for trend continuation go down. So probabilities for reversal go up. Here's a leg 3, leg 4, however you want to call it. And we've also had more than 20 bars under the EMA. So the first touch of the EMA is generally a good sell. What I like about today is the daily chart mimic the 5-minute chart mimic the daily chart from a price action perspective. So take a mental screenshot of this. So we have a strong sell-off, and then we're in the later legs, and we rally into the EMA. 3 legs up into the EMA creates a wedge top. The bulls tried 3 times in one direction. After a strong sell-off and more than 20 bars under the EMA, the first touch is usually buy. This is a better sell than a buy because we have 20 bars under the EMA. Now look at the 5-minute chart. Bunch of bars under the EMA. You could argue the EMA got pulled into this price. At the time of the day, the EMA wasn't touching these. So we're going to talk about here. So imagine a strong sell-off. We have several legs down. Count many legs, and you say momentum resets, but let's just say like 1, pullback, like 2, pullback, like 3. First touch of the EMA, we have 3 pushes up, leg 1, pullback, leg 2, pullback, leg 3, and then look at bar 61. So buying this would actually be a better sell. Buying this would turn into a loss if you don't scalp out here, and 60 is actually a better sell. It's the first touch of the EMA after more than 20 bars below. I'm saying this is first touch because this wasn't the EMA pulled into the price. At the time, there was a gap above here. So now we take a mental picture of this. Remember the late leg, leg 1, pullback, leg 2, pullback, leg 3. Then bulls get a rally, leg 1, pullback, leg 2, pullback, leg 3. First touch of the EMA is a better sell. So bears made money before bulls did, even though these are bull bars. I'll go back to the daily. Look at it. Leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4, later leg. So now we're going to count the pullback legs. Leg 1, pullback, leg 2, pullback, leg 3. 3 legs into the EMA. 3 legs into the EMA. And then bears sold the first touch of the EMA. Bears sold the first touch of the EMA. So that's just an example of how price action is fractal. It doesn't matter what time frame it is. The rules get respected. The rules are the market is either breaking out or reversing. That's it. That's what the market is based off of. So here the market's breaking out. Now the market's reversing, and a reversal is a breakout. And now the market's reversing because there's more than 20 bars on the EMA. There's enough momentum that this is the first time how do I say this? This is the first time bears are shorting above average price. So it's a good short because they've been shorting lows. So you're taking advantage of that, and this gap bar gets filled. Fill a gap above the 21st high. So that could become a bear target, and then we'll see what happens. Maybe this bar here actually gets a leg up. Leg 1, pull back, deep pullback, leg 2, and then it sells off. So we don't really know. But what we do know is specifically for today, if you can go back and look at these videos, I was saying usually this is a better sell-off because it's the first gap bar around the EMA, and it sold off. Bears almost got to the low of the day, very close. So let's get into it. On trending days, gaps stay open. Trading range days, gaps are closed. It's important to understand that because that also helps you read. The reason I talk so much about gaps and market cycles because they're cohesive. So gaps would stay open within the first half, the first and second channel. The breakout is the first part, channel is the second part. Gaps stay open. Then when we start to see gaps close in the channel part, we know the trading range is coming. So you can use the gaps to gauge where we are in the market cycle, whereas the leg count. So that's why it's important to understand, look, these gaps stayed open because we were trending. First part of the market cycle, breakout, opposite bar starts the channel phase, we get the leg 2. And then once we get into the leg 3, the later legs, I don't know why I put the chart over there. Once we get into the later legs, the gaps start to get, look, we still have gaps open here. These two this gap gets tested, but then this gap gets closed. So when this gap got closed, that's the first time a gap got closed. This is the first time the bulls rallied. You know we're in a trading range. You can't see it, but you know it's coming because big down, big up, a gap closed. Bulls have a gap. Gap closed. Now we have bear gaps. This gap's got closed. This gap got tested. It's kind of closed. So this gap got closed right here. So now we have an open gap here. Let's see the. Oh, well. Wait, where were we? We were right here, right? Yeah, so the gap got closed, gap got closed. This gap's gonna get tested on the overnight session. That's why it's important to understand gaps and market cycle and leg count. So we know we have a bunch of open gaps, and then the gaps closed down here. Small gap down. Bar 1 is a bear bar. Bar 2, big bull bar closing on a tie. Bar 3, bad follow through. We've also had a few. I'll never know how that just switches. We've also had multiple legs higher. Leg 1, pull back leg 2, pull back leg 3. This becomes a lower high when we start to see 4, 5, and 6. Bar 4, bear bar closing on slow. I think Sean to get a second leg down. Bar 5, now the mark's starting to break out. And bar 6, we have a 3-bar micro channel with a gap. Bar 7 is the first opposite bar in a new market cycle, so this is a fresh breakout, leg 1. The first pullback is usually a good short, and if you short that bar, you sit through some drawdown, but you do get a second leg. 10 and 11. Then we go above the higher time frame EMA. This is the 45-minute EMA. We go more sideways, and we start pulling back into the 5-minute EMA. Bar 12, bull bar closing on its high, strong enough to get a second leg. And this bull leg started on the bottom of 11, so it's leg 1, pull back leg 2, pull back leg 3. Sideways price action 13, 14, 15. 16, good bear bar closing on slow. Some of you may short this, but then where are we in the market cycle? Leg 1, pull back leg 2, pull back leg 3, trading range behavior. So you take the short on 16, you're actually shorting lows. 17, bull bar closing on its high, more sideways price action into the EMA. 19 and 21, double top. There's an inside bar here, so inside bar is breakout mode. And in this case, remember the bullet method I was talking about? When there's a trading range, you shoot. There's the momentum. You guys remember this? So this arrow is this leg. This is the momentum. Give me 2 seconds. So this leg is this arrow, this momentum, and this is the box. And then the corner of this box is the inside bar here, and the momentum got shot out because this was less than 20 bars, so it favored the bears. 21, 22, 23, another 3-bar micro channel. 24, breaking out below the higher time frame EMA. After 3 or 4 bars in one direction, then the probabilities for a pullback go up. 25, another inside bar. 26, inside bar, breakout mode. We get a good breakout. 27, closing on slow. 28, bear bar. 29 has a tail, but still closing below the midpoint. And then finally, 30 is closing above the midpoint. So now we can know bulls are trying to step up. On 27, bears were shorting lows. By the time we got to 29, 30, the bulls were buying lows because that's what caused this tail. Could be bears taking profits too. I think this is strong enough to reset the market cycle. Leg 1, pull back leg 2, pull back leg 3, breaks out, resets the market cycle. We could say leg 1. These are inside bars, so there's multiple ways to count it. Let's just say from 27. Leg 1, pull back leg 2, pull back leg 3, trading range behavior. You could say there's enough momentum on 40 to restart it. Leg 1, pull back leg 2, pull back leg 3, trading range behavior. So then where are we? So yeah, more sideways price action, 29. Starting to see bull bars. We have another 3 pushes by the bulls. Leg 1, pull back leg 2, pull back leg 3. There's a 3-bar bear micro channel here, so we know the bulls are not strong. This is more of a pullback than a bottoming pattern. 40, strong bear bar closing on slow. 42, continuing momentum. And we have another 3 bars. So look how the pullbacks are changing. Shallow. This is pretty extended. This is prolonged, but we were also far away from the EMA. Now we have 2 bars, 3 bull bars, 1 bear, 1 bull, 2 bulls. You see how it went multiple bear bars, some bull, multiple, some bull, multiple bear bars, some bull. all of a sudden we have a 3 bull bar micro channel. So you could already say that this was the closest thing to a range before it happened. 45, 46, bear bar closing out slow. 47, opposite bar to bull bar, pull back, 1, 2, 3, pull back, 4, excuse me. Where are we? Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4, sideways price action. So 3 bar micro channel, leg 45, 46, sideways, leg 1, pull back, leg 2. I do that when I lose my place. Okay, 49, bear bar, it's a bear bar, but closing on its midpoint. Excuse me, 48, bear bar closing on its midpoint. 49, bear bar closing on slow. Then we go more sideways. 51 has a deep rally, breaking the trend line. Another 3 legs into the EMA. Leg 1, you could even say leg 1, pull back, leg 2, pull back, leg 3, sideways. And then we have a strong bear leg, 60, 61, 61, 62, 63, 64. All bear bars closing on slow. And then we see 3 more legs right here. So leg 1, there's a tail, pull back, leg 2, pull back, leg 3. Now we have a nested wedge, 69, 70. 70 is a strong bull bar. I think that's becoming the end of the bear channel, the bear trend. 72, 71, rally sells off. 72 is back. It's followed through for 71, but it's a bad close. It closed right above 69. Then we have another good bear bar or bull bar, 73. Pull back, so leg 1, pull back, leg 2, 70 ends in a 3 bar bull micro channel. 78. Bear bar closing on slow, and then we close on the EMA. Overnight session was selling off though, so I didn't see that. Yeah, so we close on the EMA. Closing in a range, so maybe we range in the overnight session to the higher time frame. EMA catches up, and then we'll see what happens. This is the first. No, we got a good bear bar here. So see if this is strong to get continuation, or does it pull back first? All right, guys. Thanks for tuning in. I appreciate your time. And you guys ask me questions. I always enjoy it. Thank you for your support. If you learned something, share the show. Don't be a hoe. Keep asking me questions. If you need a Discord invite, let me know. Talk to you later. Bye.